Good morning, everyone. Welcome back to the Prospero.ai stock market live streams. Welcome back here on this Monday where we are seeing the markets trying to go green, it looks like, at the start of today. The QQQ is right on the flat line as we are starting this live stream. The S&P is up 0.2%. The Dow Jones is up 0.5%. The IWM is also up 0.5%. So those are the leading indices on the day. The VIX is down 3.5%, so it looks like volatility is expected to be dropping in the markets. We covered the rule of 16 last stream, so good to see the VIX going lower. We have a bunch of great topics to cover today. As always, be sure to like the video if you love these live streams and are excited for what we are going to cover today as we get on in here. So we're going to take a look at the Prospero net option sentiment for QQQ and SPY in just a moment and cover the overall markets as we turn the page on last week's trading and begin anew. I see a lot of people expecting a short-term rally at the minimum here, so we'll cover that. And we have an FOMC meeting set to take place this Wednesday. So are we going to get any newsworthy updates from the Fed, or will they just stay still and keep rates unchanged? We have an NVIDIA event this week on March 20th. NVIDIA is hosting their GTC 2025 Quantum Day. So what big updates can we expect out of this? It's kind of funny after we covered Jensen Huang pouring cold water on the quantum stock rally just a few months ago that everyone is so excited for this, and now maybe we'll get a big quantum announcement out of NVIDIA. So maybe he will change his tune pretty quickly. We have Google's Waymo achieving 2 million paid rides, and now we have Amazon launching their Zoox, challenging to be the number 2 in the full self-driving. Obviously, Tesla is there as well, but Google is leading the way as of today in total full self-drives completed. And there is a fourth competitor, Baidu in China, has had 9 million paid rides already in China. So I know we've been covering how the Chinese tech stocks have kind of performed better recently, especially BABA, but Baidu hasn't really rallied as heavily. Maybe there's some value there, especially as this full self-driving story and narrative probably takes a hold of the markets as a lot of these companies, especially Tesla, this summer launched their services. Then we have a stock that has just gotten pummeled year to date. That stock is TTD, Trade Desk, down over 54% in 2025 alone. They missed their guidance and earnings for the first time in 33 quarters earlier, about a month ago, early February, and the stock dropped. But it has just continued to go lower ever since. So the net option sentiment in the Prospero app doesn't look too bad. So we'll take a look at Trade Desk and possibly why their stock is getting hit oh so hard over the recent weeks. Even worse than the drop we've seen in the overall markets. We have an IPO expected to take place after Klarna filed on Friday, and they also announced with this that they are stealing a big partnership from a firm who was the buy now pay later servicer for Walmart, but Klarna will take that over. So highlighting Klarna stock and taking a look at it ahead of their IPO. Then there was a story about Warren Buffett upping his stakes in all 5 of his Japanese trading houses that he's invested in, and also negotiating to increase his cap over 10%. So it looks like he'll be adding to them in the future. What does he see in the Japanese market that makes him so interested in investing there? We know he's been piling cash and kind of even just mostly selling his investments in America. So what is the Oracle of Omaha up to? Then we have a question I'm posing about MicroStrategy to George. I saw they just bought 130 more Bitcoin over the past week. And I'm wondering if MicroStrategy continues to pile up the Bitcoin, are they putting a target on themselves from other large Wall Street firms? BlackRock has recently got into crypto and they have their own Bitcoin ETF. Do they become a target to try and for these other firms to try and have them undergo a liquidity event if they overstretch themselves with the purchasing of Bitcoin? And the last story that we will cover today on the stream before we switch over to the model portfolio update at the end. Is Robinhood partnering with Kalshi to launch prediction contracts in their app, which are going to start rolling out immediately, be available to all eligible customers, expected to happen in the coming days. So we've covered some of these things that Robinhood has done that kind of stretch the boundaries, or I know, play in the gray area of what a brokerage would usually typically do. The last thing they did like this was the NFL betting, but within a day, the FTC kind of scrutinized them and they took it down. So maybe this move will allow them to do more things like that in the future and not face the same scrutiny and be able to just have it up in their app. But that is all the stories we're going to cover today. As always, if I didn't say anything or cover any stocks and you have questions about, feel free to comment them in the chat. We will get to them as soon as George gets in here. But let's take a look at the SPY and the QQQ net option sentiment in Prospero. If you guys are regular viewers or regular Prospero users, you probably know that the SPY has been stuck at 0 for a while now. So let's see if anything has changed there. Hello, George. Welcome to the stream.
Thank you.
We are not seeing any change in SPY net option sentiment currently as we begin the stream today. It is still flatlined at 0. And let's take a look at the QQQ, which has been higher than the SPY recently in the signals, but not by much and still at pretty bearish level. Okay, so the QQQ today is at 21. So like I said, above the SPY, but not necessarily a bullish sign as of now. And even in just the 10 minutes or so we've been talking, the QQQ is now dipped to the red. It's still the only indice in the red today. All other major ones are green: S&P, Dow Jones, and IWM. So the markets are fighting on which way we want to go today, red or green overall. We'll see how the day develops. But yeah, George, after we got a weekend of reprieve and a green day on Friday, are you feeling any more, maybe I don't want to say bullishly, but maybe just not as ferociously bearish? I see a lot of people talking about how even if they're not bullish over, months and like the longer term, as of right now, a lot of people are thinking there could be a short-term bullish rally as we've dropped so much. And I saw a chart where the seasonality really flips in the favor of the bulls in the second half of March and early April. So are you feeling any better about the overall markets today as we open up?
Not really. I mean, a little bit, enough not to like heavily short the market, because I do think where one of the places we can go from here is, absolutely like a bit of a more extended recovery. But that being said, I think there's just, all of the hedging, SPY and option sentiment. I mean, one of the things I'm considering is looking at raising the bull line for QQQ, because we have seen it go up a little bit like today, and have some positive moves in tech stocks. But as you said, it's still red. I just think Wall Street, everyone is kind of feeling the same thing right now. And what that thing is a lot of apprehension around the idea that there could be more coming with tariffs. There's a lot of uncertainty. I mean, I think politically we're in a very different spot than, certainly I've seen in my generation. So I think all of that, and I think we've talked about this before, however you feel, I know it's a very polarizing administration. However you feel about it, we're experiencing a lot of change. And change is volatility. Volatility is scary, right? That's just a very easy for anyone, especially like for Wall Street, volatility typically isn't scary for them, but that volatility is typically more in their control and more tradable, especially for their algorithms. But if that volatility is coming from, the political sphere, it makes it very challenging. And I think that makes it even more challenging for retail investors, because obviously they have their AIs, they have their algorithms, and we try to get people as close as possible to those movements. And I think we do a really good job of that. But at the end of the day, Wall Street's upset that they don't have enough control of this market, and retail always has orders of magnitude less control. So that's why we're having like a very cautious approach, and probably will for a while, until we're at least more sure that maybe the market is going down in a clear way. But even then, we've kind of observed that that our shorts, unless there's a clear they're closer to their highs than their lows, and they look bad in our signals, we've noticed that they're still a little too close to the market. We're adding more of them is really not going to be something that moves the needle to us. And that's why for our high conviction portfolio, we've definitely moved. We've moved to a system of, just less stocks for the time being, because we want to have, want to have more control, more visibility, and we want to have, kind of a longer research process in picking them.
Yeah, I think in the Sunday newsletter yesterday, it was like 2 longs and 3 shorts, which was like the lowest total I think I've seen in the 2 years that I've been following. But I do have a question about when you reference like the SPY net option sentiment being at 0, you say often that like it's a sign of institutions hedging. If the net option sentiment is to increase, that would, I think, de facto mean that they're taking those hedges off. At whatever point that happens, like, does that signal that the market would be bouncing in that period no matter what, since like it's at such a hedged position and they would be taking them off? Or how does that work with the Prospero signals?
Well, a 0 just means a 0 likely means, it's any combination of this, but it likely means the demand for puts below where the index is changing is high, and the demand for calls above, and thus the pricing, is low. So if you're going to be 0, or if you're going to be on the end of our scale, on either like pole of the scale, both of those things has to be true. The proportion that they're true really depends. It depends on the market. It depends on like how close the scaling is. But I say that, well, because it's not necessarily that the hedges don't have to be pulled off. There could be aggressive hedging, but you could have people starting to take more flyers on calls above. Now, probably not the same people, mind you, because that's kind of dumb. But there are pair trading strategies, depending on your timeline and things like that, where you could maybe want longer term calls and shorter term puts. But again, that's where like upside and downside are going to be a little different. So it would have to be calls on like the, in the like closer to the 6-month range, and puts in closer than, in the 1 week, 1 month, and which is highly possible to be encapsulated in that option sentiment. But yeah, what we do know now, with it being 0 and staying at 0, it means demand for calls above where the indexes are low, and demand for puts below where the index is high.
So we have an FOMC meeting scheduled for this Wednesday. I feel like Jerome Powell in the past has done a very good job. Of like, if the market is dropping, he's kind of a little dovish. If it's ripping, he's kind of a little hawkish. Do you have any expectation on how you think he'll lean at this meeting, and do you think there'll be a reaction one way or the other in the markets?
Can you repeat the beginning one more time? Sorry.
I just feel like Jerome Powell has done a good job at, like, if the market's ripping, kind of being slightly hawkish. If it's dropping, being a little dovish. He's kind of, just keeping it stable and balanced. Do you think he'll?
Yeah. No, the
way?
99%, like the 90, like we're favoring a hold 99%. Same rate. And when looking at that, like, I guess I was like thinking about like balancing the market, and I lost my train of thought. But I think what happens is he sees a clearer direction when he does that. And there's one I recall where it was a pretty red day, and I think there were concerns about rates not being cut and that being delayed. And he was like, he came out and said, we're considering it. And the problem for that, and we've talked about this kind of last week, is there's concerns now about both inflation and growth, right? And what he could say about one or managing one is going to hurt the other. So we're in a pretty sensitive time because of that. And I think that's what we're saying, what we're seeing too, where it's like, if he thought that if he had a crystal ball, knew that these tariffs were going to continue and maybe even escalate, he might favor raising rates, right? Because he would be very concerned about inflation. And he might say, the market's going to be the market. It's already reacting poorly. Maybe I'll sacrifice that, let it fully correct, but just make sure I control the prices. And I might consider a raise, even though that wasn't on his roadmap at all. But I don't think these tariffs were really on his roadmap before. So, as he always kind of says, he's going to look at the data. And the data right now says that we could be in for, inflation coming back. There's been some disappointing readings. And obviously, like we talked about, we're going to have to see how these tariffs start to impact inflation. And that's been a big thing he's had to do, over the course of his tenure. So I think he'll really want to rein that in. He doesn't want to be known as Fed chair that just was like in constant inflation. So that could definitely be, because there's a lot of people that are saying Trump wants to force, he cares about the 10-year treasury and he wants to force rates down. And that's why the tariffs, that's why all this, it's really just a larger goal to force rates down. But if Powell feels that inflation is the worry, he's not gonna, I don't think he's gonna budge on that. And he might actually raise the rates, and that could cause a lot of tension between the White House and the Fed. But I think that's what people kind of like about Powell, is that he's not really political. He's pretty even-handed, and thus doesn't really worry about the perception around him, because we've kind of seen him rise above political differences before and stay out of the fold and still be pretty well liked by both parties. So yeah, it's gonna be interesting to watch the story develop. But what I do think is I don't think we're seeing like a new solve to this problem. I think until he has more clarity on if growth or inflation is going to be the bigger problem, I think he'll probably just hold and not move.
So that's funny you said that at the end. That's exactly what I wanted to ask you, how you mentioned the two problems or worries for the markets, growth and inflation right now, kind of the stagflation fear. I was going to ask, are either of those more important than the other? And if one of those worries, even just one of them, comes off the table and like the market feels confident either about inflation or either about growth, would that be enough to like calm this market drop and, set a sustainable floor? Or do you need both of those things to be fixed?
I think typically people manage the inflation monster, right? Because the inflation monster can get off the rails, and is very hard. Like you saw what happened for like this, right? Even though that this was the Fed's goal, it took many, rate raises to fix it. And that was just the normal economy, right? There were some supply issues after COVID, right? But, a trade war like fueling inflation could be very serious, especially in light of the fact that I don't think this administration is going to be making decisions based on the economy. Like this is a decision based on wanting to win a trade war and win a war of attrition. So I don't really think inflation is going to be the thing that makes them stop. But maybe. But what I would say about that is that, you can do a big rate cut. You can spend to stimulate the economy. The Fed and the government has a lot of ways to do that. Like, you can see, like, I'm not saying this will happen again, but you could see what happened when the government did stimulus, right? That pretty quickly got people spending again, created and among other things, created the whole like GameStop, like retail trader, like you put money in the hands of everyday people and they'll spend it, and they'll spend it in interesting ways, right? It's not so easy to work in the reverse, because the reverse is constraining people and having, and needing to like get a cap on growth, get a cap on inflation, by kind of hurting the economy. That's a harder one to sell than the other way around, where you're stringent on inflation and then you have to spend to stimulate. That's an easier problem. But that's just my opinion. I'm sure some would disagree. I think smart dollars can really stimulate the economy quickly, but like inflation can get to a point, you've seen it in other countries, where it just goes off the rails, and it's very, very hard to bring it back once it's reached that point. So I hope we don't get there.
Yes, let's hope. There is another event this week, also taking place on March 20th, the NVIDIA GTC 2025 Quantum Day. And I think it's very interesting that I see a lot of excitement for the quantum news that's going to come out of NVIDIA just months after we covered how Jensen Huang kind of poured cold water on the rally when all of those quantum stocks were ripping, like IonQ, RGTI, and amongst others. And you've, gave him props for how he kind of manages expectations and the narrative before, but it seems like he did that to a T this time around too.
Yeah. I mean, he's kind of a master of that. You don't have his story if you don't really know how to kind of like work the crowd. Not to just work the crowd, but have a plan to connect with your customers, have a plan to connect to your shareholders. All of it is a very like tightly managed like package. And there's a lot of people that I know that are in the startup world or even later stage companies that would never want a public company, because not only do they not want the additional scrutiny and having to it's very different to have to talk to like a board of your investors that you've chosen, and to talk to like the public about your choices, and what we're kind of our conversation with Lisa Su, about Lisa Su, and how like the shareholders are kind of turned on her, or starting to in the price, you could certainly say. But yeah, he knows how to take a story, and especially like one that was kind of like, hurting NVIDIA relatively. We kind of looked at like the days that these quantum announcements were made, and it kind of like when those stocks were soaring, it had cut into NVIDIA a little bit and was cutting out of the shine. So yeah, he absolutely played that correctly, right? In terms of making sure that, those didn't get the fever pitch of those and quantum coming reached so high that people started to like question what it is for NVIDIA. But, we kind of always said that, they're in as good position as anyone in terms of innovating, building new chips, kind of like they invented, I'm not going to say they invented, they perfected having low level code optimized GPUs and having that be, a big reason why their GPUs are so effective. So the problem right now with quantum is low level code. So you could definitely see them, pouring cold water on it until it becomes something that they could really use for the story, and then their tune's going to change. And I think that's what good CEOs do. They'll manage the narrative to benefit them, and if they need to change the narrative later because circumstances have changed for them, they can do that in a deft way. And I fully expect that to be the case. But it's a really, interesting time. It's a hard time too, I think, for someone like Jensen Huang, because, typically it's been something where, software has a certain strength and hardware has a certain strength, and it's pretty clear what you kind of have to develop. Sometimes, obviously what NVIDIA did was combining some strengths of software engineering into optimizing hardware. But, the fact that we're seeing, I think these DeepSeek models are really, really changing things, because you could say the fastest GPUs are still going to be the best to run them. But what I've observed in many years of doing this is that you kind of have to optimize the hardware around the software that it's running right now. And so right now, yes, I think NVIDIA GPUs are, the best for running anything. But I think there could be a time in the future where, certain chips, whether they be GPUs or CPUs, maybe not on, the training of the models, but maybe the retrieval of the models, or just, the ongoing running of these systems, because maybe more of it's going to be pre-trained. That's really the direction that we're going. There could be different needs in the future. And I just always, if there's one kind of tie that I always have seen, it's that, we do kind of see these jumps in algorithms, abilities and everything to drive hardware to then drive, there's kind of a certain thing. And I don't think we've kind of seen that step yet. Maybe you could argue that it was GPUs like NVIDIA that allowed this kind of breakthrough. But then, that's what I'm saying. There's kind of like a hardware breakthrough, maybe that fuels a software breakthrough that then fuels another hardware one. And I don't think we've seen that yet for the DeepSeek models, because they're so new. And it might be, NVIDIA, again, might be a tweak to what they're doing, to, the way they program the GPUs, or some other innovation that is good for DeepSeek, but or DeepSeek type models. But I think the other issue with that is, obviously they don't have they don't necessarily know, and I mean nobody does, what's coming next from these companies, whether the models are going to be more efficient, whether they're going to be more efficient in different ways than they are now. So yeah, I think it's kind of a scary time for them, but if anyone can handle it, it's Jensen.
So I feel like 2024, it was all about LLMs and, the AI narrative that was driving the markets. It was that was the focus. I'm wondering if we're transitioning to a new phase where this full self-driving AI narrative is going to, reach a fever pitch and kind of take over the discussion. We got some numbers about Google's Waymo. They're now leading the robotaxi race with 2 million paid rides already, leading the USA market, I should say. Amazon Zoox is coming. Tesla is expected to be launching this summer. How do you feel about those three? How do you feel about the kind of transition I just laid out from LLMs to full self-driving? Do you think could be a reality this year?
Yeah, I mean, I think that's a logical next step. And we kind of were always speculating that, it's interesting. We thought that, Elon Musk's government position was going to create maybe more opportunities for the business. But you could argue that he came in and had more power than, you might have even expected him to have, yet it's not going well. At least I think Starlink is more, I guess it's all more of an international relations thing, but it's so interesting because we kind of called it out as it was happening. And we were just it's really atypical for a public company CEO to be so clearly on one political side where, they're helping draw the vote. It was pretty extreme. And I think we're seeing why that's the case, right? Because if you alienate, 50% of your own country, plus a lot of other people internationally, that you know, that doesn't play well. And to be fair to both sides, I'm not sure if, having democratic like values that are more like aligned with the Democrats would have the same impact internationally. But at the same time, and like you can understand that, and you could say that like that's not, that might not be equal treatment. But at the same time, like all of these, like when you're selling something, you have to work with a consumer, right? And I think the broader world consumer doesn't like to see what's happening in America, and I think we're seeing that data coming. And maybe you could say there's a lot of tariffs that are put on American goods. Maybe you can say that this was a long time coming, but I don't think whether you're putting tariffs or whether you're not putting tariffs or whatever, I'm not sure so much alienation is going to help, anyone in the longer term. It might, but I think what's going on with Musk and the self-driving cars is that might be something that he really needs. And I imagine if, with all this, with the negative story, you got to turn it around. So I wouldn't be surprised. But at the same time, it's going to be interesting to see the accident data, because if you've ever looked at like a Waymo versus a Tesla, the hardware that they're dealing with are very, very, it's very different. The like Cruise was one that kind of had an accident in San Francisco, and then when it was dug in, it kind of had a big falling out, right? So you wonder, it could be very interesting if that happens with Teslas, and already there's like public, no matter what happens, there might be a public outcry about Teslas specifically being unsafe, lawsuits. That could be an interesting, whereas where Tesla was, before, and they're standing overall, I would say that, they could push through that. But especially if it rolls out in other countries, if there's accidents, in this one, what's that kind of like frayed relationship with some of the public going to do? But I mean, I think we were talking about, are we going to do China? I think we're going to do China next. But yeah, I think if you look at those Waymo cars and the way that they're outfitted, I think it gives, like, if accidents are going to be the main thing that potentially hurts these rollouts, or bad accidents, mistakes, I think, Waymo, from like the hardware that I've seen, I haven't seen the Zook, but the hardware that one's dealing with versus the Tesla is very, very different. And, you can never bet against Amazon in anything. And I mean, the way they do product and distribution and everything. But overall, yeah, I think we're looking at I think Tesla does need help from the government now to do what they're trying to do. Because the relationship has changed with the public.
So your response in total would make me think that Google has a real opportunity to kind of leapfrog ahead and take a solo lead in the robotaxi space, and they are still trading at.
I'll be right back.
Okay, no problem. Sorry, everyone. We got to fix the Elgato. I'll have to make you wait here until George gets back in here. But we're going to talk about Google and Baidu, the Chinese version, which is doing their own self-driving stuff. But we've had over 1,150 people in the stream today between YouTube and Twitter. So thank you all for tuning in. Hopefully you've enjoyed the conversation thus far. We shall continue when George returns. Let's see how we're doing with the likes on YouTube. Everyone, likes and comments helps us grow a lot. So if you're enjoying the stream on YouTube, be sure to like it up and leave us a kind comment if you would. That really helps. But we'll just wait here for George to get back in here, and we will continue discussing Google and Baidu. Let's check the markets. It's been about 30 minutes or so, see if there's been any developments in the meantime. I see the QQQ poked back into the green, but now is even redder. It's hitting a low of the day, down 1/3% on the day. So continuing to see a slight sell-off in tech today. The SPY is also red now, but just barely 0.02%. So very, very close to the flat line. The Dow Jones and the Russell are still green. So we're seeing maybe even a little bit more of a fading occurring in the green of the markets today. Tesla is actually down almost 6% today. Let's see how some of the other Magnificent Seven stocks are doing, although they haven't been so magnificent recently. George is back in here, so we'll just continue. We'll save that for later. We were just about to get into, if Google is able to leapfrog into the sole number one position where it's clear for self-driving, do you think they have an opportunity to see their valuation increase? They're one of the cheaper Magnificent Seven stocks right now based on valuation. And then also Baidu, which is the China version of Google, essentially, they actually, we gave some stats in the beginning of this topic, how Google's had 2 million paid rides with Waymo. Baidu has done 9 million paid rides in China. So their tech might even be, the best of everyone. And we've seen kind of a transition from American tech stock to China. Baidu hasn't really rallied as much as Baba. Maybe there's some value there. So how do you feel about all that?
First of all, I think as it relates to Google, I think all of this stuff has really all of this Gen AI stuff has really reduced the shine on them, because I did this and I said this. I think the perception around them that they were kind of an elite research R&D place, and that's what you were kind of beyond a search engine. You were kind of getting this Google was, I think, the first to do a self-driving car test. I think Sebastian Thrun, they did it with DARPA, right? It's kind of in their roots, this stuff. But I think there's really concern. I think there's concern that they might have kind of reached their peak and they're on their way down. I think that's the real problem. And I think people are definitely worried with all this generative AI stuff. We talked about it. I think at this point, Perplexity is a better product, right? And better products don't always win. Google is in a lexicon. And I think there's so many people that are maybe older that just are going to they're going to use Google for life, no matter if someone tells them. It's just ingrained in them. But I think, having something like Perplexity, come along is, and there's sure to be others, is kind of an existential threat to Google. And then, I think we've talked about it before, the fact that they might have been taken surprised by everything. By the way, they invented the transformer model. They might have been taken by surprise by it. But they haven't recovered, and Gemini is still not a very good product. So it's what the hell are they doing? What the hell are they doing with all this AI deep mind tech that they can't figure out how to build a product that competes with, OpenAI? I mean, even Amazon. I mean, they did acquire Anthropic, but hey, Google could have acquired too. They could have acquired a good product. But in terms of, Baidu, I have been looking at it. I have been looking at it as an ad. Alibaba has looked stronger, but from a value perspective, Baidu has looked stronger. They have good AI models. They're coming out with more. So yeah, it's I'm starting to feel I think, and it showed, I think the S&P is down 6% this year. And the Chinese index, I think it's Hang Seng, something like that. Maybe that's another one. Anyway, is up 26%. So I think there's a definite perception that, along with, kind of the US pissing other countries off, that's driving dollars, I think, to China. And I think there's some perception that China is starting to win on tech. And we've talked about that. That's a big problem for us. So that is probably a good way to manage the risk around the U.S. continuing to, have tariff issues, have volatility issues, is putting some of your money in these Chinese stocks like Baidu and Alibaba. Because it's a zero, you could view that as a different kind of hedge, right? A hedge without going short, right? Because if America does continue to struggle, our stock market continues to struggle, there will be more money going into those Chinese stocks.
Mm-hmm. Definitely interesting and something I want to keep watching and talking about on the streams. I want to spin now to a stock that's been hit harder than the overall markets. They've been hit hard. This stock has been pummeled in 2025 so far. So Trade Desk, TTD, had a disappointing earnings in February. They missed their report and their guidance for the first time in 33 quarters. So, it was a stock that had been, firing on all cylinders. It dropped initially off the earnings report, but then it just continued dropping ever since. And it's now down. It's actually up today, but it was down over 55% year to date before today's trading. I saw it in Prospero. It had pretty good net option sentiment. I think it was over 90. So is this stock becoming a value?
I was looking at it this morning. I kind of should have added it. I was looking at it. It was only up 1%. And it's up 3% now. Everything looks good in Prospero. Yeah, and we're looking for value plays. So maybe we'll see the rest of this afternoon. But I definitely consider an add. I'll probably add it to the trading portfolio because I imagine it'll look good in momentum score.
I believe Trade Desk is like an AppLovin type of company where they do advertising. Is this a bad sign for like Meta and Google and all the advertising companies that this stock is just getting killed in the markets?
I think there's a different perception around because those are helping with advertising. Whereas I think what Meta and Google, do really well is the targeting. And I think people just it's one of those things where there's just budgets for those things. So, I don't know. It could be if these technologies get better and better, people won't need to use Meta and Google as much, but their number, Meta's stock is doing great as AppLovin stock is doing great. So that's one thing where you have to say sometimes you have to look at the facts and say okay, AppLovin's on this meteoric rise, but it doesn't seem to be hurting Meta in the numbers. Google has other issues, but even just looking at those data points, you could say there's room for all these companies to flourish. Maybe not Trade Desk though. We'll see.
And a comment from Mario Mech saying that Trade Desk had some management missteps that they acknowledged. So maybe a lack of confidence in the CEO or management team now we're seeing.
What you want to tell us what happened, Mario?
We'll see if Mario has the insights on that. But I'll spin over to a stock that filed to IPO this past Friday, Klarna, which we've actually talked about before. It's a buy now, pay later company. Not only did they file to IPO, it was also announced that they're going to be taking a key partnership away from a firm, which was Walmart. So that's a huge one. Are you excited at all to see how this IPO is received? We have had so little IPOs recently. And what do you think about a firm now that they're losing Walmart?
Yeah, that's huge. I'm interested in what the terms Walmart has with a firm and how it competed with Klarna. I don't really like these businesses. I really think these they're kind of like payday loans where you're taking advantage of the fact that most of these things, it's one thing if you're financing a large item, but sometimes these things are like a much larger item, but sometimes these things are financing a $500 TV and you're just taking interest payments from someone that, is already probably short on money if they need these short-term loans. So I hate these kind of companies. They're basically just profiting off the fact that other people just don't want the cash to go out the door immediately and they prefer to even it out. But the bottom line is it's not like they're long-term loans. Maybe some of them are longer, but it's just issuing the credit. They're not They're not necessarily getting rates. I just don't really like this kind of loan system. I mean, the same thing with credit cards and like they're very, very high rates. There's a lot of things that that might seem on the surface helpful to people with less money, but they're almost always like keeping people in poverty and sometimes deepening their poverty. And yeah, that sucks.
I guess if it
But I think
seems
the IPO will do well. I don't like their business. I think the IPO will do well. It's like one of those things. The other side is they're very profitable businesses. And like some of these ones, I think I've owned a firm before. I'm willing to take them for a ride, but I always feel like I have to share my thoughts on like the character of the business too, because I think people should, kind of think about the companies that they're owning.
Well, we should probably spin right to this Robinhood story because it's a very similar, probably, response that we're going to get. They announced that they are partnering with Kalshi to launch Prediction Markets Hub in the Robinhood app. And we've covered how they've done some things like this before. The last one they tried was the Super Bowl betting, you would say, I guess. But it actually was only in the app for like a day, and then they got some regulatory pressure, so they took it away. But I guess with this partnership now, they're going to be able to do more things like this, and probably even they've had kind of one-offs in the past, but maybe they're planning to do like consistent, like a lot of prediction markets. I feel like Robinhood is dancing in the gray area of what a brokerage is meant to be.
Yeah, and they just paid like a $30 million fine with FINRA. Robinhood as an organization is definitely a don't ask for permission, ask for forgiveness company that they could probably like put that on their wall when you enter. And I do think they're one of those companies that probably has a lot more, has done a lot more than we even know about. I feel like it's almost always an iceberg situation with something like that. But yeah, I think that, look, it's like they're trying to just get like, if it wasn't clear before, it's abundantly clear now that they're just trying to capture people's gambling instinct. But what we kind of see when your product is like centered around gambling, when people have less money, it can really hurt. In the last bear market, definitely they got pretty hurt, but they're growing again. They kind of fell out of vogue for a little bit around the whole GameStop thing. But it just shows people, like, at the end of the day, if you make a product that's easy for people to use, they'll forget about that type of stuff. But it's sad to see companies that are just basically, they're making it clear that they're not about stock trading. They're just about like trying to find people that are gambling and take as much of their money as possible.
Do you think now that the stock has gone up and it's like, I guess you could say they're succeeding in what they're doing, that other companies will have to copycat them and kind of toe the line as well? Or do you think they won't want to like position their business in the same vein that Robinhood is? How do you feel about that going forward? Like, could you ever see Schwab prediction markets?
No, I think that Robinhood is definitely like their own animal. In terms of like, I think they have like they've built a business around kind of skirting the rules and pushing the envelope, right? I think most financial institutions built a business the opposite way, right? They're very, very big and serious on compliance, and they don't want any black eyes or anything like that.
So we have a story about Warren Buffett, and we've been covering how his cash pile has been growing. I feel like there's been a lack of interest from him in investing in any USA stocks with the high valuations, but he just recently upped his stake in 5 trading houses in Japan, and he also came to an agreement where he can now increase his stake beyond a 10% cap that had been in place. The total value of all 5 of these investments at the end of 2024 was about $24 billion. So what does Buffett see in Japan that he doesn't see in the USA?
Probably value, right? I think he's always like, I think if he's going to cash, I can't think of anything in the Japanese market specifically other than the fact that it might just be stable, right? I think that's what we saw in the US market. And you might be saying, well, the Japanese market maybe looks like the better bet for long-term stability. But other than that, it's just value. Like Buffett's looking for businesses that are pushing off cash flow at a good rate relative to the acquisition price, free cash flow per share, right? That's what he cares about. Obviously different businesses, he's going to be looking for different numbers there. But at the end of the day, it really just comes down to that for him.
Do you think that is a good bet in the long run, though? I mean, it feels so wrong to even down anything Buffett does, but like with the amount of tech innovation happening in America over the long run, do you think that is a good bet, or do you think it's just a safer bet?
Well, a lot of the times value is it doesn't have to be forever, right? It's likely it's a longer time horizon, but value could just be like Buffett saying, I want to own this for 2 years because I know for 2 years I like the cash flow of this business and it's going to get me a good return based on these cash flows coming in. I'm going to have good appreciation regardless of anything that's happening because the cash flows are going to support that appreciation. And yeah, if EPS is growing, right, regardless of what's going on at all, like if EPS is growing at a certain rate, there's a floor for those stocks, right? And I think he sees that. And yeah, I think that's the big part about value investing that, maybe is a good thing to pour some water on, which is that like value investing doesn't necessarily mean forever, right? It just means that you see value in the stock a lot. And a lot of the times you're actually expecting a correction in maybe even shorter than 2 years. You're seeing the value there. You just think it's beat up and you think by the time a year comes that it's going to happen. Now, that's not to say these investments are short. A lot of the times, obviously, companies that are at good values, unless they explode like a tech stock, which like a Japanese brokerage probably isn't, like they're probably going to keep plugging along. But no, I mean, I think especially now, like Japanese people are likely to invest in Japan. And maybe that's the other thing that he's saying, like dollars that were going to the US might now be going to Japan. And if he was already invested in these things, he might think there's even more value coming because more people are going to keep their dollars at home.
And we talked about
Japan's not really investing in China. That's the other thing, because they don't have a very good relationship at all historically. So yeah, like maybe some other countries are investing in China right now, and Buffett knows that that's not going to happen for Japan.
I was going to say, like we were talking about how the hedge could be investing in Chinese tech stocks. Maybe this is Buffett's preferred hedge. He feels a little bit safer about it. And
yeah, as we talk through it, like I think the more interesting that investment became.
Mm-hmm. We have one more topic to cover today on the stream. Thank you all for tuning in today. We've had over 1,300 people in the stream. Like the video if you liked what we covered so far, and comment right now if you have any questions before we do our switch over. But I want to talk about MicroStrategy. It was announced that they bought 130 more Bitcoin in the past week. They continue to pile it up. I wanted to bring up this conversation I'm curious about. So MicroStrategy just continues to buy Bitcoin. They're selling convertible debt to buy more Bitcoin. We saw some big, heavy Wall Street hitters come into the crypto markets like BlackRock and a lot of the others. Maybe you would say they were latecomers. I'm sure they would love to get their hands on some cheap Bitcoin if they could, now that they are coming into the industry. Do you think MicroStrategy stacking up Bitcoins puts a target on them to try and create some kind of liquidity to make it in a situation where they feel some type of pressure where they're going to have to sell some of these at a cheaper price? Do Wall Street heavy hitters work together like that, or is that not really how it goes?
It's not impossible, right? But I don't think, like, I think if you're trying to drive down Bitcoin, you're trying to drive down Bitcoin, right? I don't think you need to specifically target MicroStrategy, because like the fact of the matter is they're probably holding tighter than a lot of the other people that you're going to scare away by shorting Bitcoin. But yeah, I mean, I think something that could be interesting as this happens is like MicroStrategy as an acquisition, right? And if you're not talking about forcing them to sell and actually talking about just like lower, you lower the value of Bitcoin, you lower the value of their company, and maybe you could buy the whole thing. Granted, like buying the whole thing is probably just, you could just buy the Bitcoin if you have that much money. However, buying the like what you might be able to do if it's in a slump and like some of their debt is becoming due, you could basically buy the Bitcoin at a discount to the acquisition. Now, obviously, they could just say we're going to liquidate and get that. But obviously, if MicroStrategy liquidates, that could create a downward event where they actually do get less than if they sold the coin at a discount. So, I mean, I think that's where it might be interesting. But at the same time, I just think it's like, does MicroStrategy do anything other than buy Bitcoin? I don't think they.
I mean, they do, but it's just so minimal compared. I think they have like some software that they
Yeah, I
sell.
think they've been around since the 80s, something like that. But yeah, I don't think. I think at the end of the day, before we saw them sell Bitcoin, we'd probably see them like leverage themselves to, they'd keep taking on loans as it went down to buy more and more. And they'd probably be prepared to ride it out. So to put MicroStrategy in any real trouble, you'd probably have to be like getting it to like back to like the 20 or 30K level and like keeping it there for a while I don't know what their debt maturities is. Oh, that might be something to research. But yeah, I think it's a tall task.
And then Buffett would come and swoop in with his balance sheet and acquire MicroStrategy.
Yeah, there you go.
Mario
I don't
Mex
think so.
Mario Mex followed up on the trade desk conversation. He said client migration to a new platform did not go totally well, and revenue for the quarter missed for the first time in 33 quarters. So yeah, so I guess that a new platform transfer didn't go as smoothly as they had hoped.
And it missed at the wrong time too.
True, yeah, the market was weak to begin with. But that's the end of our topics for today. We'll do the switch over now and see you on the other side. Prospero Lab, stick with me, everyone. George will be right back with us, and we'll be doing the model portfolio update, where you get to see us make live moves to the Prospero model portfolio. Let's see how the overall markets are shaking up. It's been an hour since we started, and we saw a little bit of degradation in the rally when we checked about the halfway mark of today. Let's see. All right, the QQQ is fighting back. It's now down about 0.1% on the day. So when we checked before, it was down 1/3 of a percent. So coming back a little bit more green than it was about 30 minutes ago. The SPY, the Dow, and the Russell are all still green. So that is good to see. The VIX, actually, when we checked at the beginning of the stream, was down 3.5%. It's now down 2.25%. So a little bit of the volatility coming back. We'll have to keep a close eye on all of that. I'm wondering how George is going to position today. Very difficult market to maneuver. But let's take a look at the SPY net option sentiment and the QQQ net option sentiment, see if anything has changed. Nothing changed with the SPY. Flat line at 0. We can't get any upward momentum there. All right, let's check out the QQQ. QQQ is at 16. So when we checked at the beginning of the stream, it was at 21. So both of them slipping slightly as we've been streaming today. Let's look at the overall markets and see if anything is interesting to note. We have, let's see, are all the Magnificent Seven stocks down? Apple, Amazon, Meta, Microsoft, Tesla, Google, all red. Let's see if NVIDIA is also red. So all the Mag 7 stocks are down today. You know, we covered the drop in AMD shares, but AMD is actually green today for our AMD shareholders, up 3.5%, fighting the trend today. Let's check out Bitcoin as well, see what that's up to. Bitcoin is slightly red on the day, just barely, down 0.2% right now at 83.5 at a total level for our crypto people in the streams. Let's see, anything else interesting to note? Maybe we should check out the China stocks. We're starting to cover them a lot recently. They're all up on the day. Pinduoduo up 4%, Baba up 4.5%, Baidu up 7%. Looks like the market is beginning to maybe see what we were talking about today. JD.com up 3.5%. So yeah, as the overall tech scene continues to look fragile, the China stocks just keep on ripping. I'm wondering if when we finally get a rally in the Mag 7, if those China stocks will go down or they'll rally with it. We'll see if they were truly a hedge the whole time or not, or if people are actually confident in those businesses.
All right.
All right, we checked out SPY and QQQ. Not really much change in either. SPY at 0 and QQQ at 18.
18?
Yes. We just checked out, and the China stocks are actually up a lot today too. Baidu's up 7%, so maybe the market people were watching our stream, watching us highlight them.
I know, we really like. I can't be upset with my conservative approach, but 3 of our top picks, like the picks we already have in our portfolio, Intel, App, and Alibaba, are doing quite well. Oh well. Let me share my screen. Okay. I like how in the Prospero lab now everybody can see the camera setup. All right. Oh, 18 and 0, right?
Yep.
Same as last Thursday. Interesting. A lot of our
Interesting to see a lot of our favorite stocks doing well, but not large cap growth. It's an interesting development that we haven't seen before. Does this mean stocks like App, Baba, and Intel are seen as value? another strong day for energy. Is it time to tilt our portfolio more in that direction? Or is it a correction time? So we'll target at least one stock here. Also interesting to see large cap growth doing poorly.
Yeah.
Scratch that.
Yeah, I was like, it's doing poorly. I mean, it's not doing great here, but looking at the other numbers, it's doing relatively poorly.
Consumer discretionary not rebounding as tech did, looking at the 1 week especially. It's concerning for this index on an ongoing level.
Whoa. That would have been a good stock to own. Maybe I'm gonna consider adding like SCC instead of instead of like individual retail shorts. I might just do SEC. Look at that performance over the last month. That's nothing we can see. Like, let's look at Carter's. That's something that we short. Not a bad comp. We just shorted that recently. Wow. Okay. Never mind. Maybe keep shorting the individual stocks. But it's interesting to think about to reduce our risk, especially because a lot of those caps are going to be large. Like a lot of those stocks in SEC are going to be larger cap. But let's continue. Interesting sidebar though. Oops. We got those two BABA positions. So, and two Intel. Nice day. Nice day for us here. How many total? 26. Yeah, we're pushing the right buttons. And we added a lot of retail stuff here. Yeah, we're doing better with this portfolio than AMRC though. Blew up on us a bit today. We had 26, that's 31. Okay. We gotta tilt a little more. Oh, damn. We ended up with 2 of those. It's still low, but we don't want to have to overemphasize. Okay, that. 6, 1, 2, 3. Okay. Is CCI doing well today? I almost added it this weekend because it was just like looking on, it was on such a tear. Oh, no, it's not. Okay, I feel better. But we're definitely going to add it here. It's got like an 81 momentum score. I don't think I've ever seen anything that high, which is what made me almost add it.
Interesting, because CCI is like a REIT, right, or something like that.
Yeah.
You wouldn't expect, I feel like, that to be the momentum grabbing stock.
Let's let everybody see what we're doing. Okay, let's see. All right, we're gonna get. Let's just grab those. Carnival Cruise, no thank you. Yeah, that's a sometimes favorite. What's FNF? Oh, yep, there we go. CSGP, all right. That's a good number. Do we have an FNF position open already? Let me know.
All right, looking for it. No FNF.
We don't?
No.
Okay, I think that'll do it. Oh, damn it. Sometimes I. One energy stock. Energy. Oh. Yeah, LNG looks good. LNG looks very good. Okay, now let's just take a quick look at Okay, what stocks? I gotta look up. All right, good for those. How about my shorts? Well, so easy, I can just add them here. What's the other one? I could look quickly. I haven't even looked at the score today. It shows my... Oh no, I didn't close this one. It's not going to be as good. Okay, I'm going to have to change that. Oh, INFY, that's the one I didn't look at. CTSH is getting up there, but that's fine. Okay. I think we are ready to send this, baby. Uh-oh.
Great viewing today. Over 1,500 people tuning in.
Okay. Sending out the trading letter. All right. I think we're good. Any final questions?
I don't see any final questions, but happy St. Patrick's Day, George.
Oh, to you as well.
Enjoy the rest of your day and everyone. But we'll see you back here on Wednesday at 3 p.m., probably covering the updates from the Fed. So it should be an exciting stream. See everybody.
That'll be fun.
Yep. Bye, everyone.